Hi friends, myself Subrata Mukherjee and you are viewing my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on dissolution. This is lecture number 5 on the chapter dissolution and lecture number 16 in partnership account. Today we are going to discuss the piecemeal distribution, and the method that we have adopted here is the maximum loss method. The following is the balance sheet of Messrs. X, Y and Z, a partnership firm as on 31st December 2021. On the liability side, we have sundry creditors 10,000, bills payable 6,000, capital account of X 31,000, capital of Y 20,000 and capital of Z 6,000. On asset side, we have cash at bank rupees 1,000, sundry debtors 42,000, fixed asset 30,000. Total of asset and liability side 73,000. The profits and losses are divided in the ratio of 3:2:1. The firm was dissolved and on 31st December 2021 and the assets were gradually realized and distributed amongst the partners on a piecemeal basis. The following are the realizations made during January to March 2022. In January 2022, rupees 20,000, February 2022, rupees 21,000 and March 2022, rupees 40,000. Prepare a statement setting out the progressive distribution of cash among the partners. So here we are preparing the statement showing distribution of cash, and the method that we have adopted here is the maximum loss method. So we have prepared the 7 column here. First column is the particular, then amount, then sundry creditors, bills payable and partners X, Y and Z. So what is the amount of balance brought forward? So the amount which was due to each of these partners X, Y and Z and the sundry creditors and bills payable. Brought forward is 10,000 is the balance due to sundry creditors, 6,000 for bills payable, 31,000 due to partner X. This is the capital of partner X, 20,000 is the capital of partner Y and 6,000 is the capital of partner Z. Now the cash which was there as on 31st December 2021, so cash was distributed for rupees 1,000. Now this 1,000 cash to be distributed to sundry creditors and bills payable in 5:3. So cash balance to be distributed to creditors and bills payable in 5:3. So 625 and 375. So balance outstanding here is 9,375, then 5,625, 31,000, 20,000 and 6,000. Then in January 2022, amount realized $20,000. So from this 20,000, the first 15,000 will be paid off to sundry creditors and bills payable. So here I am writing less amount paid to sundry creditors and bills payable. This is 15,000. So 9,375 will be paid to creditors and 5,625 paid for bills payable. Now 5,000 is the surplus which is available after payment to syndicators and bills payable. So here I am writing surplus. Now how this surplus will be paid to the partners? So here again I have to write the capital claim. So capital claim of partner X is 31,000. So you can say that from this 15,000 nothing was paid to the partners. So capital claim after payment of this 15,000 to syndicators and bills payable for X is 31,000, 20,000 is the capital claim of Y, and 6,000 is the capital claim of Z. So total is 57,000 less surplus is 5,000. So maximum possible loss here is 52,000. So in this method it is assumed that nothing will be realized further, and the maximum possible loss that has to be borne by the partner is 52,000. So here is the capital claim 57,000, and this is the only amount that is available right now, that is from the sale of assets in January 2022, and it is assumed that nothing to be realized later on. Then what will be the scenario? The scenario is the maximum possible loss here is 52,000 that has to be allocated or to partner X, Y and Z in PL ratio. So maximum possible loss of 52,000 to be allocated to X, Y and Z in PL ratio. So this 52,000 is allocated in 3:2:1, which is the PL ratio. So 26,000 is the amount of loss for X, 17,333 is the loss of Y, and 8,667 is the loss of Z. So here you can see that the deficiency of Z is 2,667. Now that has to be borne by X and Y in their capital ratio. So this amount of 5,000 which was surplus available after payment to the syndicators and bills payable has to be allocated to the partners. Now here we see that there is a deficiency of Y. So this deficiency will be borne by X and Y by the solvent partner in the capital ratio, that is 31:20. So here I have to write the possible deficiency of Z shared by X and Y in capital ratio, that is 31:20. So this 2,667, which is the deficiency of Z, will be borne by X 1,621 and 1046. So you see the surplus of 5,000 will be distributed to X and Y in 3,379 and 1,621. So this is the distribution amount of rupees 5,000, that is the surplus. So distribution of rupees 5,000. So there was a surplus after payment to to Sunday creditors and bills payable of 5,000. So first of all, I have to consider that this is the maximum possible loss that has to be borne by the existing partner, that is 52,000. So this 52,000 was allocated to X, Y, and Z, and the 5,000, which is the surplus, to be distributed to the existing partner. But here we see that there is a deficiency in the column Z. So the deficiency of partner Z will be shared by X and Y, that is the solvent partner, in their capital ratio, that is 31:20. So I have absorbed this deficiency, and I see that the distribution of 5,000 is to X is given as 3,379 and 1,621. So this is the amount that was distributed from the realization in January 2022. Now let us proceed and see how the proceed of February 2022 will be distributed. So here you can write what is the balance due to X. So 31,000 is the capital, and then 3,379 was distributed to X. So balance outstanding is 27,621. This is the balance outstanding to X. 18,379 is the amount due to Y, and 6,000 is the amount due to Z. Now let's realization of February 2022. So total amount outstanding, you can add up these three figures, you will get 52,000. Now realization of February 2022 is 21,000. So here 31,000 is the maximum possible loss. So this 31,000 will be allocated to X, Y, and Z, because we are doing under maximum possible loss method. So this loss, that after realization of 21,000, nothing is going to be realized further. So the loss of 31,000 will be allocated to X, Y, Z in PL ratio. So this is the maximum possible loss to be allocated in PL ratio, 3:2:1. So if you allocate this 31,000 in PL ratio, so 15,500 is the loss of X, 10,333 is the loss of Y, and 5,167 is the loss of Z. So amount of 21,000, therefore distribution of rupees 21,000, which is the realization in the month of February 2022. So this 21,000 will be distributed to X for rupees 12,121, 8,046 and 833. So 21,000 is the realization in the month of February 2022, and at that point of time the balance due to partners was 52,000. So 31,000 is the maximum possible loss that has to be allocated to the partners in PL ratio. So amount distribution of 21,000 to X is 12,121, 8,046 is the amount distributed to Y, and 833 is the amount distributed to Z. So after disbursement of 21,000, that is the realization of February 2022. So this is the balance due. Balance due is 31,000 and 15,500, 10,333 and 5,167. Now amount realized, so realization in March 2022, which is 40,000. So this realization of rupees 40,000 in March 2022 will be distributed to X, Y, and Z in PL ratio. So 20,000, 13,333 and 6,667. So you can see that there is a surplus of rupees 9,000. So there is no chance of any loss. So after the realization in the March 2022. So this 40,000 was allocated, so distributed to partners in PL ratio. So surplus of, or this is, you can say that is the profit on realization. So profit on realization 9,000 was shared by X 4,500, 3,000 is the amount of profit of realization of Y, and 1,500 is the profit on realization of Z. So I hope you have noted down the solution the way I have shown the solution here. So if you do it on your own for at least 2 to 3 times, then I expect that you can solve the distribution, or you can prepare the statement showing distribution of cash through maximum possible loss method easily. Thank you. Thanks for watching the lecture.